You wish to know how fortunes are made, not by clever entries, not by brilliant predictions, but by what a man does after he is already in the market. That is where the real game begins. That is where men either become wealthy or quietly disappear. Most traders are obsessed with entry. They stare at charts like fortune tellers, reading tea leaves, hoping to divine the perfect moment. They believe if they can just enter right, everything else will take care of itself. I once believed the same, and I paid dearly for that belief. The truth is this: the market does not reward you for being right at the start. It rewards you for staying right. I have seen men call the trend perfectly, only to walk away with nothing. And I have seen others enter imperfectly, but manage their position with such discipline that they extracted fortunes from the same move. The difference is not intelligence, it is not even experience. It is position management. Let me tell you something that cost me millions to learn. When you enter a trade, you are not making money yet. You are only placing yourself in a position to make money. What happens next determines everything. In my early years, I traded often, too often. I chased movements, took small profits, and feared small losses. I thought activity was intelligence. I thought constant action meant progress. But the market has a way of humbling men who think they can outsmart it. I would enter a position, see a small profit, and take it quickly. I felt clever. I felt efficient, but then I would watch the market continue in the same direction without me. The real move would happen after I had already exited. That is when I began to understand something most traders never grasp. The big money is not in the thinking. It is in the sitting. You must learn to sit with a winning position. That sounds simple, doesn't it? But it is one of the hardest things a trader will ever do. Because once you are in profit, your mind begins to play tricks on you. It whispers, "Take it now, secure it. What if it reverses? What if you lose it all?" And so you exit. Not because the market told you to, but because your emotions demanded it. That is not trading. That is fear disguised as discipline. A proper operator does not exit because he is afraid. He exits because the market has proven him wrong. There is a difference, and that difference is everything. When I began to understand this, I changed my entire approach. I stopped thinking about how to enter and started thinking about how to hold. You see, a position must be treated like a living thing. It must be watched, nurtured, and managed with patience. You do not abandon it at the first sign of discomfort, nor do you cling to it when it is clearly dying. The first rule I learned was this: never average down on a losing position. Many traders believe they can rescue a bad trade by adding more to it. They think they are lowering their average price. In truth, they are increasing their risk. They are doubling down on a mistake. I have done it, and every time, it ended the same way. The market does not reward stubbornness. It punishes it. If a position moves against you and the reason for your trade is no longer valid, you must exit. Not tomorrow, not after hoping. Immediately. Small losses are the cost of doing business. Large losses are the result of ego. But when a position moves in your favor, that is where the real art begins. You do not add recklessly. You do not pile in blindly. You add only when the market confirms your judgment. This is what I call pyramiding. When I take a position and it begins to show profit, I do not rush to add more immediately. I wait. I observe. I let the market prove that the move is real. If the price continues in my direction, forming a clear structure, showing strength, then and only then do I increase my position. Not all at once. Never all at once. You must build your position like a pyramid, each addition smaller, more calculated, more precise than the last. Your largest risk is at the beginning, when uncertainty is highest. As the market proves you right, your confidence increases, but your additions must become more disciplined, not less. This is where most traders fail. They start small, and then become reckless as they gain profit. They feel invincible. They believe the market owes them more. That is when the market takes everything back. A true operator becomes more cautious as he wins. He protects his position, he respects the market. He understands that success can be just as dangerous as failure. Let me paint you a picture. You enter a trade based on a clear signal. The market moves in your favor. You are now in profit. At this moment, you have a choice. The amateur sees profit and thinks, I must protect it. He exits. The professional sees profit and thinks, I must grow it. But he does not do so blindly. He waits for confirmation. He adds at logical points. He manages risk at every step. And most importantly, he does not let the market take back what it has given him. This brings me to another principle. Protecting profits is just as important as making them. Once a position has moved significantly in your favor, you must begin to think differently. You are no longer trying to be right. You are trying to stay right. This is where trailing stops, structure, and discipline come into play. I do not move my stop out of hope. I move it based on what the market shows me. If the market forms a new structure, I adjust my position accordingly. If it shows weakness, I reduce my exposure. But I never give back a large profit out of carelessness. There were times in my career when I held positions that were deeply in profit, only to watch them return to nothing because I refused to act. I told myself the trend would continue. I convinced myself I was right. The market does not care about what you believe, it only cares about what is. And so I learned, you must protect your gains with the same discipline you use to achieve them. Now listen carefully, because this is where fortunes are truly made. A great trade is not one that gives you a quick profit. A great trade is one that you hold through its entire move. This requires patience beyond what most men possess. The market does not move in straight lines. It moves in waves. There will be pullbacks. There will be moments of doubt. There will be times when you question everything, and in those moments the weak exit. But the strong, the disciplined, they hold. Not blindly, not stubbornly, but with understanding. They know the difference between a normal retracement and a true reversal. They trust their analysis. They trust the structure. And they trust themselves. This is not something you learn overnight. It is something you earn through losses, through mistakes, through experience. I have lost fortunes, entire fortunes. And each time, I learned something new about the market and about myself. The greatest lesson of all was this. The market is not your enemy. Your emotions are. Fear will make you exit too early. Greed will make you hold too long. Hope will make you ignore reality. And if you allow any of these to control your decisions, you will never succeed. Position management is not just about numbers. It is about control. Control over your actions. Control over your emotions. Control over your ego. When you master that, the market becomes a different place. You no longer chase. You no longer panic. You no longer guess. You operate calmly, precisely, deliberately. And when you do, you begin to see what others cannot. You begin to recognize that the market offers opportunities not to those who act quickly, but to those who act correctly. The greatest fortunes I ever made were not from 100 trades. They came from a few, carefully managed, patiently held, relentlessly protected positions. And if you can learn to do the same, you will find that the market is not as mysterious as it seems. It is simply a place where discipline is rewarded and weakness is exposed. The question is, which one are you willing to be? Now understand this. Once you have learned to enter correctly and begun to build your position with discipline, the next battle is not with the market. It is with yourself. Because the larger your position grows, the louder your emotions become. When your trade is small, you think clearly, you analyze, you act with reason. But when your position begins to swell, when the numbers grow larger, when the profits become real, something changes. You begin to feel. And that is where most men lose their edge. I have seen traders who could manage a small position flawlessly, but the moment they scaled up, they became different men. Their judgment clouded, their discipline weakened. They started making decisions not based on the market, but based on the money. You must never trade the money. You must trade the market. The moment you begin to think about what the profit can buy, you have already lost control of the trade. I learned this the hard way. There was a time when I held a position that had grown beyond anything I had ever seen. The profit was enormous, enough to change everything. And instead of managing it like a professional, I began to imagine what it meant. I saw the houses, the lifestyle, the comfort. And without realizing it, I became afraid to lose it. So I tightened my stops too quickly. I exited too early. I protected the money, but I destroyed the opportunity. The market continued without me. That day, I realized something that stayed with me for the rest of my life. You must be emotionally detached from your profits if you wish to grow them. The money is not yours yet. It belongs to the market until you close the trade. Treat it as such. Now let us speak of scaling, because this is where the real strategy lies. Adding to a position is not about confidence. It is about confirmation. You do not add because you feel good about the trade. You add because the market has proven your idea correct, again and again. Each addition must be earned. If your first entry is your test, your second is your confirmation, your third is your conviction. But each step must follow structure. You must never add to a position that is not already profitable, that is not scaling. That is gambling. And when you add, you must immediately think about risk. What happens if the market turns now? You see, every addition increases not just your profit potential, but your exposure. And if you are not careful, one reversal can erase everything, so you must constantly rebalance your position. When I added to a winning trade, I often adjusted my stops across the entire position, not just the new entry, but the old ones as well. This way, even if the market turned against me, I would still walk away with a gain, not a regret. This is what separates professionals from amateurs. The amateur thinks about how much he can make. The professional thinks about how much he can lose and controls. It's another mistake I see often, and it is one that destroys more traders than bad entries ever will. Holding on to a position after the trend has ended. You see, discipline is not just about holding. It is about knowing when to stop holding. A trend does not last forever, and the signs of its end are always there, if you are willing to see them. Weakness in price, failure to continue, changes in structure. These are not random events, they are messages, and yet many traders ignore them. Why? Because they are in love with their position. They remember how right they were. They remember the profits they made, and they cannot accept that the opportunity is over. So they hold, and slowly, the market takes it all back. I have done this more times than I care to admit. I have watched winning positions turn into losses because I refused to accept that the game had changed. It is a painful lesson, but a necessary one. You must learn to exit with the same discipline you used to enter and manage. Not too early, not too late, at the right time. And the right time is not determined by your feelings. It is determined by the market. There is a quiet confidence that comes when you begin to master this. You no longer feel the need to chase every move. You no longer fear missing out, because you understand that one well-managed position can do more for you than 100 impulsive trades. That is the secret no one tells you. It is not about frequency. It is about quality. You do not need to be in the market every day. You need to be right, and when you are right, you need to press your advantage. That is how fortunes are made. I recall times when I would sit for days, sometimes weeks, doing nothing, watching, waiting, letting the market reveal its intentions. Others would call it inactivity. I called it preparation, because when the moment came, when the opportunity was clear, I did not hesitate. I entered. I managed, I built my position, and then I sat, patiently, calmly, without interference. And that single position would produce more than months of restless trading ever could. This is the discipline you must cultivate. Not the discipline to act, but the discipline to wait. Not the courage to enter, but the courage to hold. And not the desire to win, but the willingness to follow the truth of the market wherever it leads. Now let me leave you with something that will change the way you trade, if you truly understand it. You do not make money when you buy or sell. You do not even make money when the market moves in your favor. You make money when you manage your position correctly from beginning to end. Every decision after your entry matters more than the entry itself. How you react to profit, how you respond to risk, how you handle uncertainty. That is where the real game is played, and that is why most traders never succeed. They focus on the beginning and ignore the journey. But you, if you are wise, will do the opposite. You will treat every position as a process. You will enter with reason, build with discipline, protect with intelligence, and exit with clarity. And when you do, something remarkable happens. The market stops feeling like a battlefield and starts feeling like a system where patience is rewarded, discipline is respected, and consistency becomes inevitable. That is how the great fortunes were made, not by luck, not by guessing, but by understanding that a position is not just a trade, it is an opportunity to prove not how smart you are, but how controlled you can be. Master that, and the market will have no choice but to pay you.